Now, for more on the state of the U.S. economy and its outlook, I'm joined by Christopher Versace, Portfolio Manager for the Street's Trifecta stocks. Thank you for joining us.
Oh, happy to be here. Thank you.
Now, we're hearing these differing views about the health of the U.S. economy. So what's your take on its strengths and weaknesses?
Well, it really depends on where you're looking. If we look over the last several months, particularly after the election, at the manufacturing economy, we could take a look at ISM data or data from market economics that points to an actual acceleration in manufacturing. Overall business activity, orders are picking up. We even see prices picking up, which is, very indicative of an accelerating economy. In the package they were talking about, GDP being around 1.8, 1.9% last year. First half of the year is looking 2.2 to 2.4, and the data that we're getting seems to suggest that yes, we are on that path. Having said that, there are other areas of a lot of weakness. We're hearing from a lot of retailers that consumers are not spending. They're not buying clothes, for example. They're shifting more towards experiential purchases. So it's still a kind of a mixed economy. And to use your words, we're doing a little bit better than muddling through.
Now, let's also look at this issue of what could be a drag on the economy. We know that Trump ran on this platform of immigrants really being a drag on growth, and especially when it comes to jobs. Meanwhile, Fed Chair Yellen said that slowing immigration would actually slow economic growth. What sort of impact could we be looking at?
Well, if you think about the U.S. economy, and it's roughly 2/3 consumer spending driven. So the more people you have inside the U.S., the more consumption there is, the better it is for the overall economy. So if we start to slow the number of people relative to expectations, that probably means that the growth rate won't live up to what people are forecasting. So in other words, if we slow that immigration policy down, that will probably slow the economy. Remember, too, though, I think the last time we were here, we were talking about a different type of immigration where we're talking about technical scientific jobs, engineering jobs, that sort of thing.
Right.
And if we slow immigration there, too, that's going to impact companies' ability to develop new products, new services, spend on R&D. And again, that, too, will kind of slow things down a little bit.
So certainly a domino effect to look out for. Now, we know that Yellen is really looking at what happens with inflation and the labor market in terms of the pace of some of these future rate hikes. In terms of the right balance to strike, some people say she waited too long to raise rates. What is the right pace?
Well, I think if you look over the last 2 years, the Fed was kind of almost an itchy trigger finger where they were saying, oh, we think we're going to do it once, at least maybe twice this year. And it turned out in the last 2 years, they raised rates exactly twice. Now they're forecasting saying, we think in 2017 we'll do 3. That's a big jump. But I also think, though, that the Fed is going to remain data dependent. And if we listen to what Yellen said today, they want to understand, or at least have a better idea, I should say, of what Trump's policies might be. So, tax reform, okay, what is that going to be on the corporate side? What's that going to be on the individual side? What regulations are getting rolled back? What's happening with immigration, right? What's happening with trade as well? These are all factors that can have a big impact on the economy. And the other thing, too, to remember is the dollar, because as the dollar gets stronger, that is actually a drag on our exports, which slows our economy.
Now, let's also look at something that's considered really the backbone of the U.S. economy, which is small businesses. We know that Trump had concerns that small businesses weren't able to get the loans they needed to really grow their companies. And we heard Yellen say, actually, it's a very small percentage of small businesses that weren't able to get loans. So what is the actual health when it comes to what's happening with small businesses?
Well, just like the rest of the economy, I think that really since the election, we've seen things start to percolate. And we've seen that in a big rebound in small business consumer optimism, where it's at its levels it hasn't seen since December 2004. So, I hate to beat the same drum, but if we're going to get an economy that has lower taxes, infrastructure spending, and some other overhauls that Trump and crew are doing that might put less costs on small business, they might be able to expand. They might be able to invest in their business or even hire more people. So I think I can understand the optimism. My concern is that optimism is very high, and we still need to get the details of what's going on. And oftentimes when you can have a disconnect between expectations and what you actually get. So I'm a little, watching that, if you will.
So as we look ahead for the U.S. economy, in terms of that optimism and perhaps when it may start waning, what do you think could really be the biggest challenges going forward for the U.S. economy?
Well, I think the biggest one is going to be really part of what I just said, which is expectations living up to the reality, or reality living up to expectations, sorry. But, again, any potential trade war, the impact of the dollar, as well as anything disruptive over in the European elections. This whole Greece incident is bubbling back up again. and they need to get it settled with a bailout package before we have some elections over there. And there's, I think, 3 or 4 countries over the next couple months that could really change the outlook of what's going on there.
Well, I'm sure everyone will be watching very closely. A lot of economies depending on what happens here.
Absolutely true.
Well, thank you so much, as always, Christopher Versace, Portfolio Manager for the Street's Trifecta stocks.